consider the movements that we've seen in equities and bonds on the day after Election Day. What a massive rally, Carol Massar.
Yeah, I mean, we haven't seen these numbers in some time, and we're holding on our gains as we are in the final few minutes of the trading, and fairly broad base. But yeah, 2.5% higher on both the S&P and the NASDAQ 100. Whether you care or not about the Dow, it's up 3.5%. But risk trade, Trump trade, whatever you want to call it, it is definitely on today.
I'm not going to take away, I don't know if Vonnie or Scarlet is doing the bond market today.
No, you should go there anyway.
I got to go there.
You got to go.
I got to go there because we're seeing an interesting...
It's part of the Trump trade.
Yeah, we're seeing an interesting move play out in the bond market, especially toward the long end, the 30-year up 18 basis points right now, but yields up across the curve. Perhaps some concern about maybe persistent inflation if some of the president-elect's policies get put into place.
Well, I don't know, but I just saw Bitcoin pop higher above $76,000 a coin. So just coming up to the close, even though Bitcoin obviously is a 24-hour trading vehicle, but there's so much ebullience out there. When will it stop?
And you also look at the VIX, right? I mean, there's a lot of talk about how once we got the election outcome, volatility would drop. And it's dropped like a stone. The VIX is currently hovering just below 16. And that was from above 20 yesterday. And people are talking about implied volatility really calming down, the VIX curve normalizing in the aftermath of the election outcome. And there you have the closing bells. Banner day for the equity market here. The Dow Jones Industrial Average, whose composition will change tomorrow because NVIDIA is going in and Intel is coming out, gaining 3.6%. The S&P 500 adding 2.5%. Big move there. And the Nasdaq climbing almost 3% on the day. And the Russell 2000, the winner of the bunch, gaining almost 6%.
All right, guys, let's get to it because Qualcomm just crossing the Bloomberg terminal. Two red main headlines. Let's get to it. Company with the outlook sees first quarter revenue 10.5 to 11.3 billion. The forecast on the street was 10.54. So some upside, tremendous upside there. And they are approving a new $15 billion stock repurchase plan. So interesting right now, you're seeing the stock unchanged, which I am scratching my head. There you go. It's up 6% here. And you got to look at, when you've got something like that, outperformance in terms of the outlook, and then also a buyback. Keep in mind the stock's already up about 18% year to date, but it's going to be building, Tim, big time on that gain. Now up about 7.5%, almost 8%.
Yeah, let's look at some more of these headlines. The company sees first quarter revenue $10.5 billion to $11.3 billion. Estimates were at the lower end of that at $10.54 billion. As you mentioned, Carol, the company board approving a new $15 billion stock repurchase plan. Fourth quarter adjusted earnings per share also coming in above estimates at $2.69 versus $2.56. And fourth quarter adjusted revenue also coming in above estimates, $10.24 billion. Estimates are for $9.91 billion. Stock up right now 10% in the after hours.
Well, what's interesting as well is that Qualcomm is saying China sales of Android-based phones increased 40% in the fiscal year, which ended at the end of September. And that's interesting because we have been waiting to see this rebound in smartphone sales in China. And we didn't really get it when Apple reported. And now it seems like Qualcomm is giving a rosier picture on those smartphone sales.
One thing to keep in mind, of course, is that Qualcomm's main business really is phone-related chips, but it is pushing deeper into the automotive and computing sectors. And to that end, revenue of chips used in vehicles jumped to 68% in the quarter, whereas phone-related sales increased 12%. So the rate of change there for the vehicles business is really climbing ahead of that of phone-related sales. And it brings me to my next point, which is, does Qualcomm move ahead with any kind of plans to purchase Intel, as there had been reports that it would, depending on who would be in the White House?
Sounds like a question maybe on the call with analysts.
Yes.
We'll see whether or not we get it. Hey, guys, we'll continue to watch Qualcomm, now up about 10.6% in the aftermarket. Let's get to, I think we should do ARM. Yeah, let's do ARM Holdings, just crossing the Bloomberg terminal, Tim.
Yeah, ARM, we're getting a couple redheads here. ARM Holdings second quarter total revenue coming in at above estimates at $844 million. Estimates were for $810.9 million. The company sees third quarter revenue coming in between $920 to $970 million. The estimate was for just in that range at $951 million. The company does see third quarter adjusted operating expenses coming in at about $525 million. That's below what analysts estimated. Once again, the top line, second quarter total revenue, $844 million, beating estimates of $810 million. We're seeing shares move lower by about 2.3% in the after hours.
Yeah, and some of that may have to do with, this stock is up about 90% year to date. And so investors are like, show me the money, show me the results. And maybe it's not living up to the expectations. implications, because you've got ARM Holding now down about 5% lower here in the aftermarket. The company's still saying it sees fiscal year adjusted EPS of $1.45 to $1.65. Bit of a range, if you will. The estimate is for $1.56. So just maybe some, disappointment, Vonnie, in terms of how much this stock has run here this year.
Yeah, it's been one of those really volatile stocks all year. But as you say, Carol, a 90% run up, and it is valued at 76 times estimated earnings. So you really have the analyst community much more mixed on ARM than you do, say, on an Nvidia or what have you. ARM obviously much tinier, makes, way fewer chips when it comes
smaller
to
companies,
revenue.
smaller sales.
Yeah, exactly.
But it makes Nvidia look cheap by contrast, right?
Comparison, exactly.
76 times estimated earnings. Nvidia trades at 37 times. Nvidia being a bargain is already just a mind meld. Again, ARM Holdings down about 4%. I'm not sure it gives us as much a read into the chip sector, which has really shown some mixed reports as it does about ARM specifically, given the run up in the stock.
The company did say in a press release that over the past 12 months, increasing adoption of ARM tech has driven strong licensing revenue growth. Demand for AI everywhere is increasing the need for more compute, and in turn, driving our partners to make long-term commitments to more and more powerful, energy-efficient ARM technology. The company goes on to say that demand for those so-called CSS systems, compute subsystems, has been higher than expected, and it's also contributing to license growth. Royalty revenue growth has also been very positive.
All right, back to Qualcomm we go, folks, because it's up about 8.8% here in the aftermarket. Not seeing the stocks necessarily go higher in the aftermarket, but Qualcomm rather certainly is. Again, it's a sales outlook beat. It's that $15 billion buyback plan. And again, just a reminder of that outlook. First quarter revenue, they're looking for 10.5 to 11.3 billion, easily surpassing what the street was expecting of 10.54. So that explains, Scarlet, why you've got such a big bump here in the aftermarket.
Yeah, definitely. Let's also take a look at Lyft, because that company out with results. Third quarter seems to be a beat, whether it's on the revenue line or the bottom line. Revenue of $1.52 billion, exceeding the average analyst estimate of $1.44 billion. In terms of the full year outlook, Lyft sees fourth quarter gross bookings at about $4.28 to $4.35 billion. Analysts were looking for somewhere in the neighborhood of $4.23 billion, so that is also a better than expected outlook. Free cash flow for the full year of 2024 is expected to exceed $650 million. And look at the reaction in the stock price right now in after hours trading, up 16% right now. Of course, this is a stock that has dropped about 4% so far this year, so it was in need of some good news, and perhaps the bar was a little bit lower for that. All
right, so Lyft up about 16%. Let's go to Zillow. What we're getting, let's get right to the outlook. Sees fourth quarter adjusted EBITDA 90 to 105 million. The street estimate is for 102.2 million. We're seeing Zillow up about 1.6% here in the aftermarket. Fourth quarter residential revenue 364 to 374 million. That's a little light. The estimate is 375. And again, fourth quarter revenue. So again, to the outlook at Zillow, 525 million to 540 million. The estimate on the street is 531.6 million. So again, you're seeing Zillow investors liking what they hear. The stock is up kind of flat on the year, up about 2% year to date, but up another 2%, now up about 5% here in the aftermarket.
Bouncing around.
Yeah, exactly. Keep in mind, 10% of the float is shorted. So if you get a little bit of some optimism, maybe investors are doing some short coverage.
Yeah, Zillow CEO Jeremy Waxman saying that 17 total revenue growth year over year, says that they had another strong quarter. Proud of how they're executing their strategy to serve renters, buyers, sellers, agents, and the broader residential real estate industry. They're continuing to invest in tech solutions to build the integrated transaction experience consumers demand and deserve.
All right, guys, certainly a couple of names, and those big chip ones are chip related. We're going to keep an eye on. Again, Qualcomm up about 7.5% in the aftermarket, and keeping an eye on ARM Holding as well, which is down about 2.6%. So some earnings here on this Wednesday. All right, guys, that's our cross-platform coverage. Radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We will see you again, same time, same place tomorrow.